Did you know there's different types of mortgages you could get? Hey everyone, it's BrandonK again. And yes, it's true, there are multiple different ways you can get a mortgage. And the first one, and pretty much what everyone knows, is the 30-year fixed rate mortgage. With a conventional loan, you can put down as low as 5% down, and that's the lowest you can go. And what you'll get with this loan is you'll get a fixed rate, so whatever your interest rate is, it's going to stay locked in for that 30 years. Second is just going to be the same thing as a 30-year fix, except for it's only a 15-year fix. So basically, you're going to be paying this mortgage off in 15 years, what actually is better for the consumer because you're paying less interest over time. Third is going to be an adjustable rate mortgage, meaning that your interest rate that you get in the beginning of your loan does not mean that it's going to be the same at the end or any time in between. It's going to adjust to what the interest rates are at that time. So it is a little risky because rates can always go up and rates could always go down. So there's a benefit and there's a minus to each side. So you can decide what's best for you. Number 4 is going to be an FHA mortgage, which I talk a lot about because it's a first-time buyer program. Basically what FHA is trying to do is trying to get first-time buyers into their first home with a lot of incentives. You can buy a home with just a credit score of 580. You can put down 3.5%, but the only downside to this is you probably are going to have to pay private mortgage insurance. Number 5 is going to be a VA loan, so this is going to be for veterans only. Thank you to all our veterans out there for serving. The best part about this loan is that there's no down payment required and there is no private mortgage insurance. So it's a huge incentive for veterans. Number 6 is going to be USDA loans. And a USDA loan is basically a loan in a rural area where the government wants you to start building houses or buying land and building homes on them so they can start developing this area. There's no down payment required. There are also home improvement loans and grants available for this loan. Number 7 is going to be jumbo loans. Jumbo loans are very common here in the Bay Area because they exceed the county's loan limits. For example, the county loan limit in Santa Clara County is $765,500. So if you're getting a loan more than that, this is going to be a jumbo loan. Typically for jumbo loans, you're going to need at least 10% down because they are loaning you over the county loan limit. Oftentimes you're going to need at least a 700 credit score or higher, and these loans can be adjustable or fixed. Number 8, and finally the last one, is interest-only mortgages. Interest-only mortgages are not for most people because you're going to be making payments on the interest only. Of course, the bank wants its principal as well, but you're going to be paying those in periodic payments, not with your monthly payment. Typically, these loans are for people who are making a significant amount of income monthly and are not going to be in the home that long. So if you're in that situation, this loan is probably best for you. And that's it. That's all 8 mortgages that you can get to purchase a home. I hope you guys enjoyed. I hope you guys learned something. If you guys have any questions, feel free to drop them in the comments. I look forward to seeing you guys next week.